Well, of late we have seen quite a lot of bullish reports coming in on the entire cement pack, and this time it is JP Morgan which has a fairly bullish report on Ultratech Cement as well as Grasim. Do note that on Ultratech Cement, JP Morgan has gone ahead and upgraded the target price, and also on Grasim and Ultratech Cement is the top pick by JP Morgan in the entire cement pack. On Ultratech Cement, JP Morgan now has a target price of 75.60 per share. This is higher than the earlier target price of 6,700 per share. And also on Grasim, the target price now stands at nearly around 1750 per share, which is at a significant premium to the current market price of Grasim, which stands at 1390 per share. In fact, in today's trade, Grasim shares are up close to around slightly over 1.5%. In fact, do note that Grasim is rather the parent holding company of Ultratech Cement. JP Morgan does state that the entire cement sector has decisively shifted from being a seasonal trade to being a more firm cyclical as well as a CAPEX play, and they do see more scope of re-rating of the entire cement stocks. JP Morgan argues that they are seeing, and they have a very high conviction rather, in a broad-based demand recovery. They see a good amount of potential to drive the valuation re-rating for the stocks to come, and they also state that the overall ROE, which is the return on equity for the entire cement pack, is likely to be far better. This is despite the cost pressures. In fact, JP Morgan also states that on Grasim, they have gone ahead and shifted the stance to overweight now. This is also on the back of receding capital allocation concerns. Do note that overall, if you look at the Grasim stock, we value the Grasim, or rather Grasim is valued on a sum of the parts value, wherein the standalone business contains the viscose business as well as the chemical business, and then you have the listed cement player, and then you also have the other listed players like Aditya Birla Capital, Idea, Hindalco, as well as ABFRL, which are a part of the holding company itself. If you look at the overall other businesses also, this is despite the cement pack. Motilal Oswal, in a very recent note had also stated that we are seeing sustained recovery in terms of the overall business, and we also did see good amount of cost reduction in Q3. Q3 also saw some amount of reduction in terms of the standalone debt, and now net debt to EBITDA stands at 1.25x. On the viscose business, Motilal Oswal had recently stated that they're seeing an overall improved demand and pricing outlook for the viscose business for FY22, and overall outlook for the viscose business has also improved. And also in terms of the paints business, Grasim plans to become a number 2 player in the decorative paints business, and they do have a planned capex of close to around 5,000 crore itself here. In fact, overall, a very bullish report coming in, especially on the cement pack. We recently had quite a lot of brokerages itself speaking about the cement pack and the kind of demand recovery that they are seeing. So yes, keep a watch out on both Ultratech Cement as well as Grasim stock.